So I want to explain why this stock market crash is different and is very critical to understand here. It is April 15th, 2025. I'm releasing this video on Good Friday, April 18th, as the market is closed. But this is going to be a two-part series, and I will play the first part of the video for you, and then we'll get into the rest and the resolution, because I recorded this a few weeks ago, the original part, and I'm going to put my spin on it here now that things have resolved a little bit. Before we get into it, again, if you like this content, please give me a thumbs up. It really helps the channel out. Been trying really hard, grinding every day, putting out videos for the last 4 years. We're very close to 5,000 subscribers. If you're also interested in swing trading or day trading, come find me on carnivoretrades.com, or swing trading alert analysis and live day trading. Anyways, let's get into it here. I'm going to play the first part of the video, and then we'll let you guys run that through, and then I will follow that up right after here. Hey guys, I want to do a special video here to be released on a later date and kind of go over some history and how charts repeat and patterns repeat. And the reason I want to do this is for my own documentation, but just to kind of compare to other instances so you guys can learn from it too, because I'm curious to learn from it as well, because this sell-off that we've had recently since February 19th was the high, and I was able to get out of the market on the 20th. So sold all of my spec longs, all leverage longs, basically anything I didn't want to hold during a drawdown. I think all I had left was like gold, silver, and Exxon, really, ExxonMobil. So got out of everything and was looking for a down move. Did not want to short. I would have looked to short a lower high here. And I thought we were going to get that. I thought we would get like sort of a bounce, a DCB, or a bear flag, and then kind of that drop into maybe 565. We've actually overshot this target. We're now down officially just over 10% here. And the reason why I'm trying to document this is because I want to show you guys how unique this particular move is in the S&P. And I've personally, in my experience, outside of the charts that I've looked back on before making this video, I've never seen this type of price action before. And what I mean by that is, it's a 10% correction, like at the end of the day, right? It's where, it's not, this is run on the mill, I don't know where here's the thing, I don't know where the low is. I mean, we could put a low tomorrow, could have been today, it could be next week, it could go 15% away, but the activity of it, a fastest 20 calendar days, I think it was 14 or 15 trading days to go from all-time high to minus 10%. So fifth fastest in history. That alone is significant, but that's not really what intrigues me about it. What intrigues me about it is that we look at, like, let's just look at a couple others. Like, these are recent ones, right? August, I think this was not quite 10% on, I think it was like 9.9 on ES, if we account for the overnight. On NQ, I know it was like 12% or something like that, but regardless, it was, comparable in size. But the difference here is this was about the same. So you got 3, 6, 9, 12, 15. So about the same amount of time, about the same percentage, but that's not what strikes me as strange. What strikes me as strange is that a typical sell-off, even in like even when a bear market kicks off from the highs, usually has some sort of, the first leg is usually the weakest, right? It's usually some sort of DCB or bear flag. You had 2 of them here. Very weak first leg, and then you had kind of a bear flag, a rejection right at the 618 perfectly. So that's textbook. And this little swoon here, the secondary leg, usually the more aggressive one, which led to the low, but it made sense that we sold off that quickly in 3 days because we retraced those moves. Even in April, it was kind of similar, like we just had this kind of grind down, but the high, right, had this lower high, and then you could argue kind of like inside bar action here. So we went sideways to set up that down move after the initial reversal. Pretty much every other instance here. Go back to 2022. The high, first leg, 618 area retrace, and then boom, big slice. But you know, this was much faster, right? 3, 6, 9, 12, 13, 14. So 14 days. But the reason why this this leg was so aggressive is because we had that bounce, right? And then after that, we had again a perfect 618, and then pretty much like close to a 786 there on the second leg. But point is, we don't have that. Like we have one bounce here. It was 2 Fridays ago, and it was sold immediately. That to me does not really count as a bounce, like on the hourly, sure, but like for a daily, you don't have single back-to-back green days. You don't have back-to-back days of higher highs, not once. This is the only one that had a higher high, the only day, the whole time. Usually you're going to get something like this, right? And then you can get that big fast drop, or heck, even down to the 200, you know, maybe that, and then a big fast drop. But I haven't seen that. So I was wondering, are there other instances like this in history? And even to use the most extreme example, let's use the pandemic. You know, it was like 14% in what, 6 or 7 days. But then from there, with that oversold, you know, how quickly we got to that stretch, you had a 10% bounce. And guess what? It doesn't look like it, but that retraced 50% of that move in 3 trading sessions. Right. We're still yet to see, like, I'm still waiting on any sort of a pivot here with the current situation. You know, even from here, big slice down very, very fast, but we also had a blow off top to kind of, get us there, right? And again, the faster the correction, the more, you know, the faster, more impulsive the correction, the more I honestly think it's more normal because it's impulsive and it's panic. Like even right here, it's impulsive and it's panicky. And then even there, we had a pretty good bounce there and another one there, and then you know we bear flagged on like the weekly to lead to that drop. That drop is fast. It's way faster than the one we have, but it was set up by this big bear flag here, right? The only other instance I can find, we got to use SPX because we got to go all the way back. There's 2, and one of them I don't even think really even counts. It's like really not even close. But the one talking about here is right here in 65. So if we're going to 90 to 81, a little over 10%. But right here, you definitely had a bear inside bar right there for 5 days. We don't have that. We have one bounce day, with no follow through, or one green day and then another huge drop, and then finally we went down and had this big, bounce there and then the new low. Like that's the other instance. Even right here, kind of similar, but not really fully 10% really. Even then, at least we had two bounce days in a row. But the other instance I think is like the closest is 68, 69, where we just kind of went down. At least we had 3 kind of inside bear days. Then we had that big swoon there, and then a 50% retrace. Oh, sorry, 618. So, I've studied a lot of bear markets before, and it's very rare to see that. Like I know I've seen periods where we sold faster. I traded through the flash crash in 2010, but it's the nature of how it's selling without any sort of bounce, not even a bear flag, right? 1929. Like, yeah, this was a crash though, and even that you had a good retrace there. Like this isn't a crash in the sense that it's panicky, which is why it's so strange. 87, right? That was definitely a crash, but even that, we exceeded the 618 there. Very strange. I'm very curious to see how this resolves. I'm obviously going to finish this video up after it resolves, and we'll go from there. But I'm willing to bet here that wherever the low is, it's going to retrace at least 50%, probably the 618, and maybe even go higher and go to new highs. Everybody's talking about recession now. All the pundits on the street just lowered their forecasts for the S&P for 2025. 3 weeks ago, they all had 7,000, and it would have been nice to have them lower the forecast then, but now they're lowering it into the hole. So typical stuff here, and you can see, I mean, from here, we go back to SPY. Yeah, 580 is clearly like the line in the sand, right? So we gapped up above that, and all this is, theoretically, this is all distribution, because once we gapped up here, it started selling, and once we broke that, there was nothing left. But usually markets will want to retest, so theoretically, let's just say the low's in right now. Yeah, 50% retrace would take you right back to that line. 618 would be 589. Maybe we go lower to like 540, it gets up in that area. But very interested to see where that is, and can't wait to add to this video later. So now on to part 2 here, and this is now being recorded a few weeks after the original video, which ironically was exactly on the day of the low, where we kind of said, hey, we don't know if this is the low, but it could be. That was, and the funny thing is, if you look at some of those examples, one of the points I was making is that, dude, we have this move here and not a 50% fib retrace, and on the exact day, what happened afterwards, we almost got a 50% fib. If you do use the ES, you can see it got pretty close. If we use an unadjusted chart of ES, which I don't really like, you can see it did tag it, but nonetheless, we had a bounce there, and I thought it was very unusual to see that, but it's funny how that day ended up being the low. But I want to kind of go over this here, and really what I'm talking about is essentially, what I talked about in that video is that, yeah, this was not normal, right? Because we had effectively a crash afterwards. And I'm doing this video, I did the prior video here because I want to document this stuff for further use for everyone to be able to reference back to. Not that this will, be an event that we see very often, but when we see it in the future, it's good to recognize this stuff. This is not normal. And I wrote an article about this I think it was last week. And my kind of assumption here, I don't think it's an assumption, I think this is what happened, is that it's very important to understand this. We've never seen ODTE in a bear market before. Don't give me that August stuff. Don't give me, we had ODTE during 2023, the fall. That's not a bear market, okay? Look at the, look at a weekly chart here of SPX, right? Look at a monthly chart of SPX. That is just a 3-bar pullback, right? You can't even barely see the August move here. I'm talking about an actual bear phase where we see, 10% or more declines, especially with a bear aggressive bear selling. And again, the first bounce didn't even get us really technically a 50% fib. So that was extremely aggressive. And why it's important to understand is because that's how we get these outside moves. If you'll recall in the video or in the article I talked about, if you want to check it out, it's on carnivoretrades.com here, right under market insights. But I referenced Kem Garçon, and he's big options expert. If you're not familiar with him, great work here. But he talks about the risks of zero DTE exposure. He also said about a month ago, prior to this, that we would see a historic type day. And I think that's what he was referencing here. And as of the last week, we did see a historic day. We had a 10% move, the largest move in the NASDAQ, single day gain in the NASDAQ. And I talked about this being important because it's just now being reported on, CNBC just now getting on the train yesterday, discussing ODT, volatility causing more of an outside move, more of an exaggerated move. And why I think this is important is I think that this whole thing is going to get blamed on that. And we may even see, regulation when it's all said and done. In fact, I'm surprised they haven't blamed it more on that. But this is a different market, and we have, to an extent, in the first video, the first half of this video, I talked about how, I've never seen this type of selling. I have seen that type of selling, but in very slow, controlled environments, very, very, brief environments. For example, in fact, I talked about this in the article there, but there has been times, even in this little pocket here in September or in October there, they were really pushing that tape down with kind of that just no bounce bid. Every bounce is sold immediately. If we go back here, let's look at an hourly chart. 20 EMA is just resistance the whole way down. No attempt at a bounce, no chance of a bounce, and none of these like supports, gaps, nothing meant anything. We didn't have so much as a single day, green day before more red, right? Just tape slamming, right? I've seen that in very short bursts, but not for 4 weeks in a row. And I think that is something that we have to consider moving forward, especially if we stay in a bear market. We could see more volatility like this. When we had that tariff move, if you think that this wasn't ODT related, you're absolutely kidding yourself. The futures did push it down, but those extra moves there definitely exacerbated by ODT. Likewise, this outside move likely exacerbated by ODT. So this is a new market now, and I think everybody needs to understand that. And if you're not familiar with how ODT works and with how just gamma squeezing in general works, it's probably something you might want to learn. I didn't know, I wasn't really well versed in it until a year or two ago. But you always got to be evolving your style here as, the meta changes. And that's something I'm always talking about. But anyway, I just wanted to get into that and just discuss here that this is probably something that's here to stay, and that it will probably result in regulation somehow. I'm sure retail will get screwed. And they'll blame us for it, even though it's not our fault. And they'll probably come up with some new margin requirements. But I think this volatility is here to stay. I don't care right now. I'm not talking about if we resolve down or up here at this current time. I just want to point out that obviously original analysis was correct. This was not normal. It's evidenced by that big drop that we had. And furthermore, moving forward, we need to take these things into consideration. I think it's something that everybody should understand. Anyways, guys, I'll wrap it up here again. You guys take care. Have a great holiday weekend. Come find me on carnivoretrades.com, and I will see you guys all next week.